Late at night, when you can't sleep, a certain kind of worry creeps in. It's not about you, really. It's about the people you'd leave behind. Your spouse, your kids, your grandkids, the mortgage that isn't paid off yet. The thought that if something happened to you tomorrow, the people you love most might be left struggling. It's one of the most natural, most loving worries a human being can have. And there is an entire industry that has studied that exact worry at that exact hour of the night and built a business around it. Because when you're over 50 and that fear is real, they have something to sell you. They'll call it protection. They'll call it peace of mind. They'll call it a gift to your family. And for a lot of people, what they're actually selling is one of the most expensive, most confusing, most profitable traps in all of personal finance. Today, I'm going to show you how the life insurance trap works, how to tell the honest product from the ripoff, and how to protect your family without letting anyone rob you in the process. Let me say this clearly right at the start, because I never want to mislead you. Life insurance is not a scam. For a lot of families, it's genuinely important, even essential. If people depend on your income, having the right kind of coverage can be one of the most loving, responsible things you ever do. So this is not a video telling you to cancel your policy or avoid insurance. It's a video about telling the difference between the simple, honest kind that protects your family and the complicated, expensive kind that mostly protects the salesman's paycheck. Because those two things get deliberately blurred together, and that blur is where the trap lives. So let's unblur it. To understand the trap, you first have to understand what life insurance is actually supposed to do. And at its heart, it's beautifully simple. The honest version works like this. You're worried that if you die, the people who depend on you will be in financial trouble. So you make a deal. You pay a company a modest amount of money every month, and in exchange, they make a promise. If you die while the policy is active, they pay your family a large, tax-free sum of money. That's it. That's the whole idea. It's a safety net, pure and simple. This basic, no-frills version is called term life insurance because it covers you for a specific term, a set number of years. And here's the important thing about it. It is usually shockingly cheap because it's doing exactly one job and doing it plainly. For most people, for most of their lives, this simple version is all they ever need. A working parent with kids and a mortgage buys enough coverage to protect the family until the kids are grown and the house is paid off. Simple. Affordable. It does its job, and then, when you no longer need it, it quietly ends. There's no trick to it. There's also, for the salesperson, not very much money in it. And that small detail is where our story turns. Because a simple, cheap product that pays the salesperson very little is not a product an entire industry wants to sell you. They want to sell you something bigger, something more complicated, something that pays them and keeps paying them for decades. And to do that, they had to invent a version of life insurance that looks like the simple one, but hides something very different inside. That invention is the mask. And now I'll show you what's underneath it. Here is the trick at the center of the whole thing, and once you see it, you can never unsee it. The industry took that simple idea, pay a little, protect your family, and they bolted a second thing onto it. They said, what if your life insurance wasn't just insurance? What if it was also an investment? What if, every month, part of your payment went toward protecting your family, and another part went into a special account inside the policy that grows over time, like savings? Doesn't that sound wonderful? Protection and investment, all in one. Two birds, one stone. They gave these combined products impressive official-sounding names: whole life, universal life, indexed universal life. The details vary, but they all share the same basic pitch. This isn't just insurance, it's an asset. It builds cash value. It's permanent. It's an investment in your future. And to someone over 50, sitting across from a friendly, confident salesperson, that sounds so much smarter, so much more grown up than boring, cheap, temporary term insurance. Why would you buy the cheap thing that expires, when for a little more, you could buy the sophisticated thing that lasts forever and builds value? And that, right there, is the exact moment the trap closes. Because here is what they don't put in big letters on the brochure. These combined products cost you many, many times more than simple term insurance for the very same amount of protection. Sometimes 10 times more, sometimes more than that. And that giant extra cost, a huge chunk of it, especially in the early years, doesn't go into your investment at all. It goes to fees, to the company, and to a fat commission for the person who sold it to you. In many of these policies, in the first year, almost none of your money actually ends up as cash value. You could pay in thousands of dollars and watch the investment part show almost nothing to show for it, because it was quietly eaten by costs and commission before it ever got a chance to grow. And it gets worse, because the mask has more layers. That investment they promised you, it usually grows painfully slowly, dragged down by all those internal fees, often earning far less than you would have made putting the same money into a simple, ordinary investment account on your own. So you're getting expensive insurance and a mediocre investment bundled together, and paying a premium for the privilege of both. You'd very often have been far better off buying the cheap, simple insurance and investing the difference yourself. But they don't tell you that, because that path doesn't pay them a commission. Then there are the handcuffs. These policies are built to trap your money inside them. If you sign up, and then a year or two later you realize you've made a mistake and you want your money back, you can't just walk away clean. Many of these products hit you with something called a surrender charge, a steep penalty for leaving early that can claw back a big piece of what you paid in. So even when people realize they've been sold the wrong thing, they often feel stuck, because escaping costs them too. The trap has a lock on the inside. And now, the part that makes me the angriest. The part aimed squarely at your age group, because the people selling these products know something about being over 50. They know that this is when the fear gets loudest. Your own parents may have passed. You're thinking about your mortality in a way you didn't at 30. You're worried about being a burden. You're worried about leaving your spouse with debt, or your kids with funeral costs. And so, they design pitches and entire products aimed right at that tender spot. You've probably seen the ads. No medical exam, guaranteed acceptance, just pennies a day to protect your loved ones. Don't leave your family with the bill. They wrap the whole thing in love and duty and fear, and they use that emotional pressure to sell products that are often wildly overpriced for what little they actually pay out. Some of these final expense or guaranteed policies are so expensive relative to their payout that if you live a normal lifespan, you can end up paying in more than your family will ever get back. Read that again. You can pay in more than they get out. That's not protection. That's a bad bet dressed up as an act of love. This is the collapse. And like every trap I show you, notice how quiet and how polite it is. Nobody breaks the law. Nobody points a gun. A kind, professional person sits across from you, speaks warmly about your family, and walks you gently into a decades-long contract that quietly drains money you didn't need to spend, protecting your loved ones far less efficiently than the simple option would have, while paying that kind, professional person a very large commission for the trouble. So, Who pays for the mansion the insurance executive lives in? You do. Every family that got talked out of the cheap, honest option and into the expensive, complicated one paid a brick of that house. And most of them never even realized there was a cheaper, better path sitting right next to them the whole time. But here's the good news. The same good news as always. The trap only works while you don't understand it. And the moment you do, protecting your family becomes simple and cheap again. So let me give you the rules. Grab a pen, because this is the part that can save your family a fortune. Rule number 1, and it's the foundation of everything. Keep your insurance and your investing separate. This one idea diffuses almost the entire trap. Insurance is for protecting your family if you die. Investing is for growing your money while you live. When someone tries to sell you a single product that claims to do both at once, be very, very suspicious. Because bundling them together is exactly how they hide the enormous fees. Buy simple insurance to do the protecting. Do your investing separately, somewhere cheap and transparent. Almost always, you come out far ahead. Rule number 2. For most people, the simple kind, term life, is the answer, not the fancy kind. It does the actual job, protecting your family, for a tiny fraction of the cost. Before you ever let someone sell you a permanent or whole life or universal policy with an investment bolted on, get a quote for plain term insurance first and compare the prices. When you see the difference, you'll understand instantly why the salesperson would rather you never asked. Rule number 3. Be extremely careful with anything sold using fear and urgency, especially those guaranteed acceptance, no exam policies aimed at older folks. Sometimes they genuinely make sense. For instance, if you have serious health problems and can't get other coverage. But often they are a poor deal, priced sky high for a small payout. Never buy one under pressure. Always ask the simple question: over my expected lifetime, how much will I pay in total, and how much will my family actually receive? If the first number is bigger than the second, walk away. And rule number 4, the one that ties it all together. Whenever anyone is selling you an insurance product, ask them the 4 magic words we always come back to. How are you paid? A salesperson earning a giant commission on a complicated product has a powerful reason to steer you away from the simple, cheap option that's better for you. Knowing how they get paid tells you whose interest they're really serving. If the answer makes them squirm, you already have your answer. Now let me be completely fair, because I always will be with you. Protecting your family is a beautiful, responsible thing to do, and the right insurance is part of that. This isn't about being cynical or refusing to plan. It's the opposite. It's about making sure that the love you feel for your family actually translates into protection for them, instead of being harvested by a salesman who saw your worry and priced it. The fear you feel at midnight is real, and it's valid. Just don't let anyone use it as a lever. Handle it in the daylight, calmly, with simple products and clear numbers. That's how you turn your love into a real safety net, instead of an expensive illusion. Because here's the truth they'd rather you slept through. The goal was never to buy the most impressive policy. The goal is to protect the people you love, for the least amount of money, so there's more left over for the life you're all still living. And the person who understands the difference is the person whose family is truly taken care of. If this cleared the fog even a little, send it to someone over 50 who's been getting those protect your family phone calls and letters. They deserve to see behind the curtain. And stick around, because next time, I'm detecting another trap they're hoping you'll never spot.